The year's most talked about initial public offering is coming up. Will the Facebook IPO be a good deal for the company and its new shareholders? Joining us for this week's Smith Business Close-Up is Gerard Hoberg, an associate professor of finance at the University of Maryland's Robert H. Smith School of Business. Dr. Hoberg, thank you for being with us.
Thank you. It's a pleasure.
Reports have focused on this Facebook IPO coming out at a roughly $100 billion valuation. That's a pretty valuable website.
Absolutely, it is.
What do you make of the talk at this stage?
Well, what I make of it is I see something that's close to unprecedented. I see a huge IPO, a wonderfully successful company, but I also see investment risks that are pretty well balanced on the plus and the minus.
Why does the company need to do this?
Well, if you read the official documentation from the company, quite frankly, they don't. If we look at how they intend to use the IPO proceeds, what we see is very vague general language indicating they will raise a lot of money, but we're not really sure how they will use it. Therefore, they don't need it, but they can benefit from it in the long term.
And it gives a lot of insiders, people who've worked there for a long time, liquidity, the ability to sell their shares. What's the deal look like for people who might be buying in? And traditionally, how have IPOs been for early investors?
Yes, very good question. Traditionally, IPOs have been questionable investments. There's a fair amount of literature from the 1980s and 1990s that suggests IPOs actually underperform. However, if you look at the Facebook IPO, the literature would suggest that this particular IPO should do about average, perhaps even above average. The key attributes of this firm are a lot of prestige as far as the underwriters willing to put their name on this IPO. We see a firm that's very large and very successful, and history shows these firms do about average relative to the stock market overall, or perhaps even slightly above average.
Does going public change a company? What will be different about Facebook a year or two from now than if they hadn't taken this step?
Well, one could say from the external user's perspective, I don't think we're going to see a whole lot of change. However, long term, I think Facebook will become more flexible and agile, and they may even benefit as far as their earnings, that is, their ability to attract customer loyalty, visibility on their web space. The IPO will encourage, in a sense, people using Facebook as an internet user to become engaged, with the company's success and funding its investments. On agility, the IPO will give the firm ultimately its own currency, sort of like a nation has its own currency and can use that to buy products or services, etc. Facebook will be able to issue its own stock and use this stock to buy other companies and mergers, to issue new stock anytime it needs additional capital. And I think we're going to see a very agile and flexible firm, one that's also already successful, continue to do so.
On the flip side, they will have additional regulatory responsibilities in terms of reporting their business details, profit, loss, and so forth, and also some of the new bookkeeping responsibilities that they'll have.
Yes, they will. And I see that as being a relatively minor cost for a firm like Facebook, the primary reason being the costs of disclosure are generally fixed. And when you are a $100 billion enterprise, that fixed cost is very minimal. On the flip side, the risk from their perspective really is does the disclosure force them to reveal to the public things they would rather not tell us? Things that, for example, competitor firms might like to know. A private firm, for example, may need to maintain a proprietary advantage. And that's really the key risk from their perspective.
All right, Gerard Hoberg joining us from the Smith School of Business. Thanks very much for your time.
Thank you. It's a pleasure.